The alarm bells are ringing. The safe haven bid is accelerating. And as of this Monday morning, silver has exploded higher by nearly 4% in a single trading session. March silver futures are up $3.66, trading at $75.65. This is not a gradual drift higher. This is not a slow grind. This is an explosive move driven by pure geopolitical fear and technical momentum that is now pointing directly at the all-time highs. The weekend surprise that shocked the world, the U.S. military raid that captured Venezuelan dictator Nicolas Maduro, has sent capital flooding into precious metals. Gold is up nearly $98 at $4,127. Silver is outperforming on a percentage basis. And the technical structure is screaming that the path of least resistance is still higher. If you sold during last week's correction, if you let the index rebalancing shakeout convince you that the rally was over, you made a serious mistake. The bull market is not over. The bull market is just getting started. And today's price action is the proof. Let me walk you through exactly what happened, because the details matter. Over the weekend, United States military forces conducted a surprise raid in Venezuela. President Nicolas Maduro was captured and removed from the country. His wife was also seized. They are expected to appear in federal court. Washington has issued warnings that additional military action remains possible if interim authorities fail to comply with American demands. This is regime change. This is the projection of American military power in Latin America. This is a geopolitical earthquake that is still sending shockwaves through global markets. And precious metals are responding exactly as they should. When governments fall, when military operations commence, when the world becomes more uncertain, rational investors seek safety. They seek assets that cannot be printed by central banks. They seek assets that have protected wealth through wars and revolutions for 5,000 years. They seek silver and gold. The market reaction has been fascinating to observe. Bloomberg reported that both safe haven assets and risk-sensitive assets rose after the Venezuela news. Gold and the US dollar rallied as traditional safe havens, but equity markets also gained, with Europe's Stoxx X 50 rising more than 1% and Asian markets hitting all-time highs. Christopher Dembick, senior investment advisor at Pictet Asset Management, explained the dynamic. He said the economic impact of what happened in Venezuela is too small to weigh on equity markets. The geopolitical risk is elevated, but the direct economic consequences are limited. This creates an unusual environment where both defensive assets and growth assets can rise simultaneously. But make no mistake, precious metals are the primary beneficiaries of uncertainty. Gold above $4,400 and silver pushing towards $76 confirms that the safe haven trade is alive and well. The technical picture for silver is extraordinarily bullish. Let me break down the key indicators because numbers do not lie. On the daily chart, silver continues to trade within a rising channel that has been intact for months. This channel pattern indicates that bullish sentiment remains dominant. The price is making higher highs and higher lows. The structure is textbook bullish. The 14-day relative strength index stands at 66.57. This is a critically important reading. The RSI measures momentum on a scale from 0 to 100. Readings above 70 are considered overbought. Readings below 30 are considered oversold. At 66.57, silver has strong bullish momentum without being overbought. There's room to run. The recent uptick in RSI from lower levels confirms that buying interest is strengthening. The buyers are in control. The moving average structure is equally constructive. The 9-day exponential moving average is positioned well above the 50-day EMA. Silver is trading above both moving averages. This alignment is classic bullish configuration. Both averages are sloping positively after a sustained rally. When price is above rising moving averages, the trend is up. When shorter-term averages are above longer-term averages, momentum is positive. All systems are go. The technical indicators are aligned for continued gains. The resistance levels are clearly defined. The next major resistance sits at the upper edge of the ascending channel at approximately $83.10. This is where the channel boundary will create natural selling pressure. But if silver breaks above this channel, the path opens to the all-time high of $85.87, which was reached on December 29, 2025. That is barely 2 weeks ago. The record is fresh. The level is within reach. A move from current prices of 75.65 to the all-time high represents upside of more than 13%. And the fundamentals support that move. On the support side, the technical structure is equally clear. Immediate support sits at the 9-day EMA around $72.38. Below that, the lower boundary of the rising channel provides support near $72.10. These are the levels where buyers are likely to step in on any pullback. A daily close beneath the channel would trigger a more significant pullback toward the 50-day EMA at $60.85. But I do not expect that breakdown. The fundamental drivers are too strong, the geopolitical tailwinds are too powerful, the supply constraints are too severe. The Wyckoff market rating for March silver futures stands at 7.5. For those unfamiliar with this methodology, Wyckoff ratings range from 0 to 10, with 10 being the most bullish. A rating of 7.5 indicates strong bullish positioning with room for continued gains. The bull's next upside price objective is closing prices above solid technical resistance at the record high of $82.67. The bear's objective is closing prices below support at last week as low of $69.22. The immediate technical picture clearly favors the bulls. Now, let me address the broader market context because silver does not trade in isolation. The US dollar index is slightly firmer today, which would typically create headwinds for precious metals. But silver is ignoring the dollar strength because the safe haven bid is overwhelming the currency correlation. When geopolitical fear is intense enough, both the dollar and precious metals can rise together. We are in that environment right now. The yield on the 10-year Treasury note fell 2 basis points to 4.17%. Lower yields reduce the opportunity cost of holding non-yielding assets like silver. This is supportive. Crude oil prices are near steady around $57.50 per barrel, indicating that oil traders are taking the Venezuela developments in stride. OPEC Plus confirmed over the weekend that they will keep production levels unchanged through the end of March. The oil market is not panicking, but the precious metals market is pricing in elevated risk. The Federal Reserve policy outlook continues to support precious metals. Philadelphia Fed President Anna Paulson said over the weekend that modest additional U.S. interest rate cuts could be appropriate later in 2026 if the economy maintains a benign outlook. She described current monetary policy as still a little restrictive, which will help bring inflation to the Fed's 2% target. She noted that while risks to the labor market remain elevated, the market is clearly bending but not breaking. This language suggests the Fed remains on track for additional rate cuts this year. Markets are pricing in at least 2 more cuts. Lower rates reduce the opportunity cost of holding silver. Lower rates weaken the dollar over time. Lower rates support precious metals prices. The economic data calendar this week is loaded with market-moving events. Friday brings the monthly jobs report for December, which is the most important employment data release. The JOLTS report and ADP employment figures will provide additional labor market color. ISM purchasing managers indexes will gauge economic activity. The Michigan Consumer Confidence Survey will measure consumer sentiment. Each of these releases has the potential to move markets. Weak data supports rate cut expectations in precious metals. Strong data could create short-term headwinds, but the overarching trend is clear. The economy is slowing, the Fed is cutting, silver is rising. The geopolitical backdrop extends beyond Venezuela. U.S. negotiators will join European leaders in Paris on Tuesday for talks on security guarantees for Ukraine. President Zelensky said the focus will be on security guarantees and recovery, with meetings scheduled with President Trump's team. Ukraine hopes to arrange a leaders-level meeting in the U.S. by the end of January. The Russia-Ukraine conflict, which is approaching its 4th year, remains unresolved. Every headline about negotiations, about military developments, about potential escalation or de-escalation moves markets. Precious metals benefit from this persistent uncertainty. Silver benefits from a world that cannot find peace. Venezuela's acting president, Delcy Rodriguez, asked the U.S. to work with her country, striking a more conciliatory tone toward the Trump administration after her initial outrage at Maduro's capture. This suggests the situation may stabilize without further military action. But the geopolitical risk premium is now priced into markets. The precedent has been set. The U.S. has demonstrated willingness to remove hostile governments by force. Other adversaries are watching. Other calculations are being made. The world is permanently more uncertain after this weekend, and precious metals are permanently more valuable. The positioning for the days ahead is clear. Silver has confirmed its technical breakout. The momentum indicators are bullish. The moving average structure supports higher prices. The fundamental drivers, including Fed rate cuts, geopolitical uncertainty, supply constraints, and industrial demand, remain fully intact. The correction from the $83 high was a shakeout driven by index rebalancing and margin increases. That shakeout is over. The rally has resumed. The all-time high is back in view. If you own silver, hold your position. Do not sell into this strength. The technical target at $83.10 is the next objective. The all-time high at $85.87 is achievable. Triple-digit silver remains on the table if current dynamics persist. The safe haven bid from Venezuela adds fuel to an already explosive fundamental setup. Every correction from here forward should be viewed as a buying opportunity, not an exit signal. If you are looking to add to your position, watch the support levels. The 9-day EMA around $72.38 is immediate support. The lower channel boundary at $72.10 is secondary support. Any pullback to these levels represents a gift. The selling pressure from last week's index rebalancing has been absorbed. The buyers are in control. The path of least resistance is higher. The alarm bells that rang over the weekend are not going silent. Venezuela is just the latest catalyst in a world that produces new crises daily. The safe haven trade is not a temporary phenomenon. It is a permanent feature of a global system that has lost its stability. Silver is responding appropriately. Silver is repricing for a world of constant uncertainty. And investors who own physical metal are protected, while investors who dismissed precious metals are vulnerable. The technicals confirm it. The fundamentals support it. The geopolitics demand it. Silver is going higher. The breakout is confirmed. The target is $83 and beyond. Position yourself accordingly.